Okay, so I know you saw my video on a USDA loan, so now it's time to talk about an FHA loan. What is an FHA loan? Probably the loan that you've been hearing about, but you don't know what it is because everybody asks me, what is an FHA loan? Would I qualify? Well, let's get into it. An FHA loan, FHA stands for a Federal Housing Administration loan. It is insured by the Federal Housing Administration, in other words, the government, so lenders can give you better terms on your loan without increasing their risk. So it incentivizes lenders to give you a better deal on your home loan. Now, a lot of people think FHA is a first-time homebuyer loan. It's not a first-time homebuyer loan because you can use it multiple times as long as you qualify for the criteria that you need to meet in order to get an FHA loan. So how much money do I have to spend out of pocket? Well, in order to do a down payment on an FHA loan, you only need 3.5%. That is a huge incentive to buy with an FHA loan because sure, you're gonna have private mortgage insurance, which we'll talk about later in the video, but you only have to come out of pocket 3.5%. So instead of having to save $50, $60, $70,000, you only gotta pay $10,000, $15,000, which is 3.5% of your purchase price. So what does your credit score have to be? Well, in order to get the benefit of that 3.5% interest rate, you're also going to have a credit score of about 580. Now, 580 is not super stellar, but if you have a 580, you could still qualify because, like I said, the government is insuring the loan, so lenders are more likely to give you a better term. Now, if you have below a 580, when you talk to your lender, you may have to come out of pocket closer to 10% for an FHA loan to still qualify, but hey, 10% is much better than 20%. And to have a credit score that's, less than 580 and still qualify for a loan, that's pretty good. So debt to income ratio can either qualify you for a loan or disqualify you for a loan or from a loan program. But for an FHA loan, you're going to need about lower than a 43% debt to income ratio, with about 31% of that being allocated to your house debt. So in my other video about USDA loans, I talked about how there is an income limit, but there is no income limit for FHA loans. So FHA loans are owner occupied, meaning you have to occupy and live in the home that you buy on an FHA loan for at least a year, unless you're going to sell it prior to living in it for a year. But if you're going to live there for a year and then try to rent it out afterwards, which is a very common rental strategy, you have to live there for at least 365 days or a year. FHA loans are known for how powerful they are at getting your foot in the door of rental properties. For example, buying multi-unit properties like a 2 to 4 unit small multifamily, living there, renting out portions of your home or other units of your home, and it is a good investment strategy. So think about that if you are getting a USDA loan, an FHA loan, or a VA loan. As I said, FHA loans are a foot in the door loan, meaning you have to get low down payment, it's a lower barrier to entry, and then eventually, if you'd like to, you can refinance it into a better loan terms where you don't have to pay private mortgage insurance. So getting into private mortgage insurance, that is one of the drawbacks and the downsides of getting an FHA loan. Because you're not paying a high amount down, you do have to pay mortgage insurance on that, and oftentimes that can be wrapped into the cost of the mortgage, but it is an extra expense that gets tacked on to the end of your loan. FHA loans do have one other drawback, which is that, of course, they have to meet FHA standards. So the condition of the property has to be up to FHA standards, or they can deny the loan based off the property that you're selecting. But another pro, like I said, you do not have, this is a myth, is that you have a minimum amount of times you can only use an FHA loan once, and it's only for first-time home buyers, and after that, you're not allowed to use it ever again. Nope. You can use it multiple times. So you can purchase your first home on an FHA loan and after a year, use it and keep it as a rental and then purchase your next home. Or you can use an FHA loan, sell the home, use another FHA loan. There is no limit on how many times that you can use an FHA loan. So that's a benefit, especially for serial investors. So if you have questions, comments, or concerns about FHA loans, give me a call or a text, and I can get you to a qualified mortgage professional who's able to answer all of those questions, and then we can start looking at homes if you qualify. I'll leave my contact information linked in the description down below. Have a good rest of your day. Like, comment, share, and subscribe.